What's up, everybody? Just give me 1 second. I'm going to get the tweet out like I always do, and then we can kick this off. All right, got the tweet out. How's everybody doing? You guys having a good long weekend? What's up, Raul? Give it a few minutes for some people to come in, and we will get this thing kicked off in about 2 more minutes. Yeah, my 5-year-old daughter finally gave me the green light to trim it or shave it. I think we have an interesting week ahead, even though it's a short week. Market's obviously in a predicament, I guess, for lack of a better word. Just another minute, guys. We'll get it started here. You guys all got big plans for tomorrow, since you're not going to be trading? What's up, Robbie? I'm having a good weekend so far, man. What's up, Sam? Hopefully my allergies don't flare up. I was like seriously 5 minutes before I went live, I was having a crazy sneezing fit. That is the one downside, I think, to doing this live, right? If something like that happens, it just is what it is. All right, guys, it's close enough to 5 p.m. market time. Let's go ahead and start off. As always, guys, if you don't have a broker you can trust, check out Cobra. There's a link in the description. It'll get you 25% off your commissions. It'll get you a month free of your platform, and you will not be unhappy. It's honestly the best company I've used in terms of brokerages. I've used them all. Give them a shot. Spike Heat, if you guys don't know about them, they create a product that allows you to pull historical tick data on stocks like up to 20 years ago, and you can use the data to figure out if you actually have a statistical edge, if something maybe you have been noticing in the market actually has a highly probable setup where you can expect a positive expectancy. This is the way to prove or disprove it. There's a link in the description for them as well. I can't recommend them enough. Another company I can't recommend enough, guys, Scripts to Trade. These guys create indicators for Thinkorswim and TradingView, and they have a whole collection of indicators they've already created, custom indicators that do some really, really neat things. And if they don't already have what you need, they can make it. So anything you can dream up, they can turn it into a reality. Give them a check out. TraderView, guys, if you don't understand what these guys do, check them out. There's a link in the description for them as well. It allows you to track your performance metrics. So your win rate, your expectancy, your amount of trades you're taking, when you're taking trades, when you're making the majority of your money, when you're losing the majority of your money. Things that are so important to know, but most people probably overlook. Check these guys out, because if you don't know your performance metrics, you're really you're trading blind, guys. Traders for a Cause coming up end of the month. Make sure, if you can't go, you at least head over to their website and make a donation for cancer research. Honestly, cancer affects almost every single person in some form or another in the US, whether it's personally or family member or friends, right? It's so broad reaching. There's not really a better cause out there, in my opinion, to donate to. And there are some earnings. Remember, Monday the market is closed, so nothing there in the earnings calendar, but we do have, there's a few names in there, like I see Neo and Billy and Restoration Hardware, some names in there that are going to be worth watching. So make sure you understand who's reporting this week, and make sure you know if it's going to affect any of your positions. You don't want to be blindsided by that kind of stuff. So real quick, before I get started on the topic or whatever, I just wanted to point out there was news this morning about Bed Bath & Beyond CFO. Very tragic, and I just want people to realize that, when we're in a bear market, that becomes a more common thing. And make sure you guys are paying attention to your mental health, and be there for your peers, be there for your friends, be there for your fellow traders, and make sure that you reach out to people, and make sure if you know someone took a big loss or whatever, just reach out and just make sure they're okay, and give them someone to talk to, lend them an ear. It goes a long way, guys, and nothing is ever so bad that you should throw your life away over it. I just can't stress that enough. All right, so I actually am going to talk this during the beginning here about things that do and don't happen very often in bear markets, and how bear markets end, how bull markets end. Basically, we're going to talk about trends. And so to do that, we're actually going to have to use a chart. So I'm going to switch over to the other view where we have a chart. And so the one thing I like to talk about is the fact that we have bear markets that have historically happened to study, to make sure we know what to look for. What are the signs when a market's reversing? What are the signs when it's not reversing? Like, when is it safe to put capital at risk for long-term stuff? We need to know those kinds of things, so that we're not just trying to guess tops and bottoms. I can't stress that enough, guys. Guessing tops and bottoms is a fool's errand. I really could care less about being able to call a top or a bottom. If you guys remember, the last 13-year bull market was nonstop the perma bears on Twitter trying to call a top for over a decade. This is it. This is the top. We're overextended. And now we're in a bear market, and you're seeing the same thing on the opposite side. Everyone's trying to call a bottom. This is the bottom. That's the bottom. Whatever, dude. Like, let's just be objective, and I'm trying to give you guys some tools that can help you do exactly that, right? So you'll hear me talk a lot about, when we get into the broader market, right, what I would be looking for in order to see a possible end to the bear market. And I talked about this last week in the Sunday prep, and that was needing to see the higher time frames, like not just the weekly, but the monthly also, start to make higher lows and then higher highs, because those are the time frames when those, I kind of like think of them in terms of, like, if we were talking about boats, right? Like, the daily chart would be like a little speedboat, and your weekly chart might be like a big sailboat, but like the monthly chart would be kind of one of those big cargo freight carriers, and they take a long time to turn. But when they do, then they can get going and travel unimpeded. So, this time frame here's your SPX monthly chart. And yes, usually I use the ES, right? This is the one that has all my markings on it, and we talk about this chart every single Sunday, right? So what we want to see is this attempt to go lower on this time frame. This is the monthly chart, and currently we are probing lower. We are trying to go, and if we were going to stay in a bear market, we're going to do so via more lows. We're going to have to continue to make lower lows every time we go lower, and that's just the way you can't. I've been trading for almost a decade, and I've never seen a stock that was making higher lows go lower. It just, you can't have those two things at the same time, right? So if this were to end, we would say that this attempt to go lower right here fails to go lower, and then we can break above August's highs, and that would basically, let me just draw it on the chart for you. So it would be this push lower that fails to go and make new lows, and then we break up this way, right? So this is what I call a long continuation trigger on a monthly time frame, because the monthly time frame, whoops, I don't want to be stuck on it. There we go. The monthly time frame, even though everything else has been in a downtrend, right? The weekly chart, the daily chart, everything was in a downtrend. We're in a bear market. The monthly chart is really still just making this first major pullback into some levels, right? Yet, and we talk about this all the time, right? Is just because it got through the 20 doesn't mean that it's not still the first pullback into it, right? So in order for this to hold this uptrend, if you look at a monthly chart and you zoom way out, it's still an uptrend. Even though we've come way off highs, it's still in an uptrend. So in order for this pullback to end, it needs to put in a high rate or a higher low here, and then next attempt to go lower, make an intermediate higher low, and then break August's highs, and that would get us an attempt to get back to all-time highs. Now, one of the concepts I really want to hammer home for you guys is this concept of, in order to go lower, sometimes we must try to go higher first and fail to be able to do so, right? So, you know, there's only so low something can go before it runs out of sellers, like people that are price sensitive at certain prices, they stop out, and, you know, eventually the selling dries up, and the lower it goes, no one's got the nerve to try to short something that far down into the hole, right? So all that becomes left is buyers, and things then find support and try to push. In order to actually go lower, everybody that starts buying at certain levels, and when it starts to turn into good support and you build a big base of long positions holding this, whatever it is, whether it's an individual equity or the indexes or whatever, when they make that push, what they're trying to do is they are trying to reverse that pullback and get back into the uptrend. They're the bulls, right? What happens when everybody does that and it fails and it can't get back to highs, and then it starts to roll over? Now you have the powder loaded in the cannon to get that next leg down. So if this happens on every single time frame, guys, and so we've seen this constantly happening on the daily and the weekly chart, right? Let's look at a weekly here. Let me get rid of these lines I drew. A second here. All right, so on the weekly chart, you get this low here, and we pull back, we make this higher low, and everybody's pushing. Everybody's making this push. This is this big old rally. Well, if it fails to get any sort of momentum to where it can get back up to these highs and we can go back into a secular bull market and starts to roll over and comes back under these lows, everybody that's part of this move, except the people that are stubborn and don't want to, or maybe the guys, I guess, that are dollar cost averaging in, but the people that are price sensitive and they're just traders and they're going to respect their levels of risk, they all got to bail. They all need to stop out as this thing starts to roll back over, because eventually, or apparently, right, their thesis was wrong, right? They're trying to catch a bottom. They're trying to pick the bottom of this bear market. And so if it fails to go higher, that's what puts the powder in the cannon to send us lower. And the same concept applies vice versa, right? Sometimes we need to try to go lower in order to go higher, right? So think about in a bull market. The bull market, it can't just keep going up, 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 right? And we talk about this on daily time frames too, to point out the fact that when things just go straight up, right, that sets the stage for a major move down, a major flush, because it wasn't a healthy move up, right? We need to see healthy moves that trend, higher highs, higher lows. Things can't just go parabolic, because that's unsustainable. And so that this concept plays out on every single time frame. This attempt to go higher, and when that attempt to go higher fails, it's what creates the next move down. We saw it right here when we had this, what people were thinking might have been the bottom, a big push, and then we started making lower highs and lower lows against the daily 20, and we came and eventually made new lows, and the downtrend continues. But I don't think that we could have had this big of a move down without first trying to go higher, right? That's the concept. Now, why am I talking about all this? Well, because if we get this, if we were to get this long continuation trigger on the monthly chart, typically, and this is why I always say you guys need to study the markets historically and look at precedent, right? Go look at former bear markets, right? If you go back and look at any time on this SPX chart, the vast majority of times when we get this setup on the monthly time frame, it gets us back to all-time highs and we continue higher, right? You can see them all over the place. Basically, you're just looking for pullbacks into the 20, followed by a higher low, and then that continuation trigger. They happen everywhere. Now, the problem is there's been twice, I found 2 times on the SPX's history where you get this setup and it fails to get to all-time highs. And one of them was in 1969. Whoops, get off this drawing tool. See here, and this is how these are previous bear markets and how they ended, right? The big sell-off in 2008, 2009. What was it followed by? A push up, a higher low on the monthly chart, and we broke that, and boom, 13-year bull market. That's why we have this. That's why I had this all drawn out on here from, I don't remember, I did a webinar or something. Again, here's the setup, does not trigger, right? We never broke this level. Rolled over, went lower. Here's the setup. This time it triggers. Ends that bear market. This was the .com bubble, right? But let's go back to 1969. 1969 is the one example I can find where you do get the setup, right? We pull back into the monthly 20, we push up, we make this higher low, and we trigger. And it fails to get to all-time highs up here, okay? And what happens? When we roll over after that, it gets really, really ugly, right? Like, what was this move? When it fails, from where it failed to where it bottomed, lost another 35%, okay? Now, there is one other time where we had this setup, and it triggers, and we then fail to get to all-time highs, and then it also becomes a failed short continuation trigger. I mean, technically it's not a failed one because it got to where it was going, right? We made new lows, but then it never really had that follow through to the downside. But I kind of have a feeling that this bear market may end up giving us that setup. And actually it was funny because Benito was like, well, why do you think so? And the reason I kind of had that feeling is because this has been a very weird and controlled pullback, right? On the monthly time frame, this is very symmetrical to the move up. It's just been like, it was a weird straight up after the 2020 COVID lows. Obviously that V-shaped recovery, everybody knows about it and has talked about it for a long time now. But this sell-off has just been really wide range, but really controlled and very textbook. And I just get this feeling, especially you can like look into the weekly charts, is that what I feel like is going to happen is it's just been too controlled, and eventually we're going to make a base. And obviously remember, as you get into the lower time frames, what can form a base on a weekly chart is actually a lot longer of a time on a daily chart. And so what I think could happen is us start to make some sort of base here, and we make this push, which on the monthly time frame would look exactly like what we're talking about, right? That setup. But that for that setup to then fail and cause a much bigger capitulation, something that like what we haven't seen yet, right? Even though we've had a lot of range and we've had some very, very volatile days, and it's not just my opinion on this. I actually have heard a lot of other people kind of agreeing with the fact that we haven't really seen that capitulation. Doesn't mean you're going to get it either, right? The market has this funny way of just not quite giving you what you think it needs to, right? Like, it's not our job to dictate to the market what the market's going to do. But it is our job. It is our job to freaking make plans for all these different situations. And so just keep in mind that you'll hear me talk about, especially when we get into the broader market today, you guys are going to hear me talk about what I think is going to happen in the near term, for day trades, for like very short near term, maybe over the next week or two. But then there's still this looming concept of what would need to happen in the longer term for things to get healthy again and possibly set us up for a push to the highs. And keep in mind that even if those things all line up and we end up getting that continuation long trigger on the monthly time frame, it still has the possibility of failing and then sending us lower. And I just want to make sure everybody understands that and uses that concept when you're just learning how to read trend. Is all about understanding how the time frames do a dance, right? And if you guys don't understand that concept, check out True Trader. We talk about it all the time because there is no more important topic in trading. If you're going to be involved in markets, you need to have an understanding of how stocks move, how stocks trend, and how these time frames work together. Honestly, I see a lot of people on FinTwit and social media, different social media platforms or whatever, that it's very apparent that they have zero concept of those things. And it's, yeah, I guess you can make money for maybe a short stretch or whatever, but I think to have any chance of any sort of longevity in the markets, a clear fundamental understanding of the way stocks trend and the way these time frames work together is crucial. It's absolutely crucial. So I wanted to touch on that before we get into the broader market analysis, and then we will get on with the rest of the show. All right, so let me switch us over to the ES. Actually, got to do the disclaimer. I'm sorry. Guys, neither I, True Trader, or any of our affiliates are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. It's simply for entertainment purposes. All right, now that we got that legalese out of the way. So I do not have notes prepared for the broader market or the sector analysis. I'm literally just going to talk about what I see when I look at this, what I think would happen, how I'll play it if certain things happen, and then we'll just go from there, okay? So on the daily chart, we were actually talking about this the other day. Let's look at it without the pivot so it's less clutter on the screen. This pullback from the big rally has not had an attempt to go higher yet. You could, if you don't understand, this here was just a push up to make a lower high, which then rolled over. We have not had that setup that we were kind of just drawing out on the monthly chart. We haven't had that on this daily chart since this pullback started. Now, we do have very well-defined close term support. Thursday and Friday's lows lining up really well with this trend line, as well as this horizontal support line. It doesn't mean it's going to hold, and for all I know, in an hour or so, whenever the Globe, actually I think Globex opens tonight, right? Even though it's a holiday, I don't know. I could be very wrong on that. Regardless, when the futures do open, if they just gap under Thursday's lows, then we have to look at the next level in the next area. And I actually think Friday's price action was hideous. To have that big push after getting this big old reversal candle on Thursday, to have that push, which is what I think a lot of people expected. Everybody was like, look, we should have some really good long setups. We've had a big sell-off down into support. You get a big reversal candle on Thursday, and then Friday morning we get that big push, and it gave it all back. It gave it all back and some, right? That's really ugly. So, just by going off of what a lot of the market participants are probably feeling and thinking right now, my gut tells me we go lower. But if we don't, I think you can get trades on down here with really, really tight risk, right? So let's say we don't gap down. Let's say we open somewhere in Friday's range and flush off the open down into some of these levels. I think you get some good opportunities of putting on some really, really asymmetric trades. Now, they very well may fail, and you got to be ready for that and size appropriately or whatever. But if that were to hold, if Thursday, Friday's lows hold, maybe we can start to get that push up, because the lower we go, and I said this last Sunday and I'm sticking to it, the lower we go without a significant bounce or an attempt to go higher first, the more I lean into the long ideas, because just like things can't just go straight up forever, they're not just going to go straight down forever, okay? Now, that is an ugly candle on Friday. I do think we're going lower, that's what my gut says. But the lower we go, especially if we gap down and capitulate and flush out, I'm going to be looking towards a lot of the long ideas. Now, if it starts to rally later in the week, we kind of push up into the underside of the 20-day or some of these recent resistance areas, then I'm going to start looking to be at least a little more balanced, or if not, leaning towards the short ideas. Because I definitely don't think that we're out of the woods here or anything. I actually think any kind of attempt to go higher is going to end up giving us the ability to put in a lower high on the weekly chart up here, somewhere in this area, okay? And if you get that set up, you basically have the push up, the pullback, the lower high, and then we have this level down here to break. And that would be a continuation short trigger on the weekly time frame to keep the bear market downtrend. And that's basically what the way I'm going to play it. I want to be long for that eventual push up, and when it makes that lower high, or at least gets to a level where it could put in that lower high, I want to be starting to visit the short ideas, especially considering if this were to play out, if this makes a lower high on the weekly chart, and then we break last week's lows, that could really be a big trade there, especially in a lot of these names that are setting up. So get rid of those lines. So let's just dive right into the actual levels. This is a 120-minute time frame here. So I have two levels marked down here by last week's lows, guys. I have an alert to let me know when we're approaching last week's lows, and I have another alert down here underneath Thursday's lows to let me know that we actually breached them, right? If we breach them, I don't want to touch anything until we get down into this monthly pivot area. Honestly, I didn't draw this line, but you should be able to see it. You see these highs here, highs, lows. I just feel like this level had a lot of price action. You got the monthly pivot right in there as well. So 3,800 to 3,850, that's kind of what I'm looking at as support if we lose last week's lows. Below that, I'm looking at this, let's see, 3,720. We'll call it 3,720. 3,700 is also that round psychological level, just this whole area down here in it right around 3,700. Those are the levels of support for the upcoming week. Again, remember, I look at this every single night. So like if we come down and maybe we're trading around this 3,700 level by the end of month or Tuesday, I'll be mapping out levels of support lower, because as the week goes on, I have to keep monitoring where we're at, right? So I'm giving you my look ahead for the week, but this is just the Sunday prep, right? So as far as resistance, I think you have clear-cut spots right up into the underside of the 50-day at 4K, 4,000, that psychological round level. Yes, that was the spot that rejected on Friday. I wanted to point out one thing I thought was kind of interesting, right? And that is right here, we start making these little uptrends from the big sell-offs, and we get these failed breakouts, right? So you can see this level right here. We just poke above it and then slam down, right? And then what happens? Same thing. Sell off, get a little bit of an uptrend going, and then just poke above the highs and fail. Poke above the highs, fail. Same thing right here. Poke above the highs, fail. I don't know if it continues to happen. Like I said, the lower we go without a significant bounce, I'm leaning towards the longs. If we slam, if we were to open up anywhere down in this 3,900 area and just slam off the open straight into the underside of 4K, I'm probably looking for short ideas on that pop. But above that, I'm actually trying to be patient for anything up into this 4,100 level, 4,120 if you want to say something more accurate. The 20 days up there, 4,140. I have alerts set up around for 4,150 as well. And then I want to know when we're approaching up here into this 4,180s as well. And I have a lot of resistance marked out above it from previous weeks, right? 2 weeks ago, we were trading up here, and I was marking out resistance for that week. Those things never got traded into, but I leave those alerts live, and I actually extend their expiration date a little bit down the road so that they're still there and I don't have to revisit them. So if you see all these resistance levels up higher, those are from previous weeks where I was like, if we push up here, I'm leaning short. That's all those are, right? I just want to make sure you guys don't think I'm not discussing those levels. All right, so NQ, exact same thoughts. As always, these things are going to be very correlated. This is just more tech heavy. But I think this sell-off is getting pretty drastic, and I think that we're going to be due for a bounce. keep in mind, yes, we broke this trend line, but I always say the same thing, right? These trend lines, for me, aren't written in stone levels. They're just visual guides. Exact same way, like we broke out of this downtrending line a few weeks ago, and I told you then, I said, look, that doesn't mean that we're out of the woods. And sure enough, we're right back under it, making lower highs and lower lows and fading off. So just keep in mind, just because you see a trend line on my chart drawn out, I draw those for visual guides. That's it, nothing more. So even though we're below it, I still feel like any kind of lower move down into certain levels, I'm leaning long. Any kind of pops back up into these areas, I'm probably leaning short. So let's just get into the actual levels I got marked. Again, just like with ES, I got last week's lows marked, and I also have underneath it, so I know if we breach. Below that, I'm looking at this 11,775 area where you got the monthly pivot. And below that, I have 11, let's see. Remember, I marked the alerts are set ahead of where I'm actually looking to find support. I'm looking at this 11,300. That's kind of the level I like for the support. But I have the alert set at 11,400, right? Make sure you guys understand that concept as well. For resistance, underside of the 50-day, again, this 12.5 level. Above that, we're talking more 12.8 to 12.9. The 20 days up there at 13,000. And then from the highs from, what is that? Looks like the week of August 26th. Yeah, the week of August 26th, those recent highs, which were up in there in 13,200. So those are the resistance levels I'll be looking at when we push up into those areas. If we push up into those areas, I'll be looking for shorts. Let's look at Bitcoin real quick. Again, still traveling sideways in this range. It's just stuck in this channel. We're at the lower end of it, right? I think this 19,000 level, even though below 18, what is it? No, 17,567. This low here, that's the low that, you know, sends us tumbling lower, because that's basically the rut row level, right? I still think you use this 19,000 level to play off of, because honestly, below that, I don't think anything good's happening. If we continue to hold 19K, you might get some pushes up. And again, that 23.6 was the level I look at for the short side on pushes back up on that for Bitcoin. All right, so let's get into the sector analysis. Let me look at the ETFs, and we'll go check out bar chart real fast. Let's get into the sector matrix. Still a lot of red. Let's see, materials were hit hard, IT hit hard, real estate down big last week. Relative strength, if I had to pick one, was this utilities. Again, not what you really want to see if you're hoping that the bear market ends. And then healthcare. And so let's check out underneath the hood. We'll just go one at a time. Now, listen, I did make a note. I didn't make any notes about sector analysis or broader market, but I did make one note, and it just says, what you're going to notice is so many things look like they're trying super hard to hang on to really, really key levels, whether it's indices, ETFs, or individual names, right? So that's going to be the theme. The overarching theme when you start looking at some of these things is that they're really, really like teeter-tottering on the brink of losing some key levels. Retail doesn't really fit that bill. Retail is just, you know, holding basically this uptrend line here. Under last week's lows could send this thing down to 58, which would be the next level where I look at for it to have support. But if it were to bounce right here, I think anything up into the underside of the 20 days is probably a fade. Let's look at XLF. Click it. There we go. Let's look at a weekly. So big pullback here, right in the support. This is where I would be looking for it to start to hold, is this 32 area. If that continues to hold, remember, this is one of those sectors I actually like the way it was behaving. It doesn't mean it won't lose levels. Like if the market starts peeling off to the downside, some of these sectors are going to turn pretty ugly. We'll have to be looking. That's a very key tool to have in your bag, guys. If the market starts selling off, you should be using the sectors to spot what sectors are having strength, relative strength, right? We always talk about relative strength in terms of individual names, right? Oh, the SPY's red, but like Apple's green today, right? It's got relative strength. But you also need to understand sectors and understand, like, look, everything's getting crushed, but like one sector is green in a sea of red, right? Those are things to make notes about. So pay attention to that stuff, guys. But XLF, remember, was behaving very well, while a lot of other stuff looked like dog crap. It's, you know, it would have been nice for it to hold this 3380 area, but we're below it and we stuffed it on Friday. So I do want to watch to see what happens when we test 32. If we get below 32 and start butting our head against it, I think we might come and test those recent lows around 30. Let's see, XLRE, the real estate ETF. This one right here needs to hold this level. If it doesn't, I think the 200 day is going to be the next test. And I do think any kind of pops back into the underside of 43 or where I would look to be short bias on that. XLV, this is the one that really has me. This thing needs to hold this level. This level was so key so many times. And you know, it did come below it that one time, and what we talked about was the fact that, like, man, that was a really quick reclaim after losing it, and then to hold it again, now we're testing it again. And honestly, if it can't hold this level under 124, and that's actually, I have it, you can see it says look out below, possibly fade ABBV, which is an individual name, which is in this sector. This is a sector I'm watching big this week. If it can't hold that level, this could get ugly. Now, granted, it does have another level below it, which is exactly where that bounce off happened. But below that, and this is, remember guys, healthcare's been one of those sectors where when the rest of the market was starting their bear market downtrends in each ETF, this thing was holding up. Like, this chart is still not completely broken yet. It's been just stuck in a sideways channel, which shows you relative strength overall during this whole market pullback and correction, right? But we talked about it this last week, I think, and that was the concept of, like, eventually the Grim Reaper comes for everybody, right? So just because it hasn't rolled over and gone into that big old market correction yet doesn't mean it can't. XLB, yeah, this one's kind of, you know, it's definitely down into levels where you would expect it to try to hold some support. Again, if it loses Thursday's lows, it's going to look like everything else. I think we'll come down here and test 71. But if it can hold last week's lows, maybe a pop back into the underside of the 20-day. You're going to hear me say that a lot, guys, because the way things broke down last week, a lot of things got extended to the downside underneath the 20-day, and any kind of spikes back up into the underside of that moving average, to me, is a good short setup, especially on that first push into it. XLI, same thing. This one, in fact, actually lost Thursday's lows on Friday's action, right? So that actually showed, that's a really ugly candle. In fact, be very surprised if this doesn't head lower. Anything can happen in the market, guys, and I'm not trying to, all I want you guys to understand is to think about things in terms of probabilities, right? You had a lot of other sectors we just looked at where the pullback on Friday still made a higher low on intraday time frames by not breaking Thursday's lows. Then you get into something like XLI, and it took out Thursday's lows with Friday. So think about what that feels like if you're in that sector, and you know everything else made, you know, maybe it pulled back, it was heavy in a weak market, but still didn't lose Thursday's lows, and the sector you're in did. It's just not a good feeling, right? Utilities were the ones that, remember, had relative strength, still kind of holding up near those all-time highs, still kind of just flagging up here, and still in above a lot of different support levels. This 73 level we had been discussing a lot. So 70, any kind of pullback into the 50-day, 73, that would be where I'd be looking to try some longs. Again, I don't play in the sandbox very often. There's a few names that I will trade in it, and that's about it. Staples. This is one that got ugly. Look at that Friday candle. I really should probably stop using the pivots on these charts to show you guys this stuff. All right, so just because it gets the charts too confusing and jumbled, right? I know a lot of people don't trade the pivots unless you're in True Trader, so I'll try to remember to not use them on the ETFs. But that's an ugly candle on Friday. Not only that, but if you look at the weekly chart, it's pretty convincing now that we are well below this uptrend line that we thought maybe we were trying to reclaim. So it's, it looked promising, but now it's really starting to look like, I think, any kind of pops back into the underside of last week's highs, big time fade for consumer staples. Any kind of push up, I think what we're going to look at in hindsight and realize is that this ends up just being the major lower high right here for something that eventually comes down and comes back under these levels here for a bigger move down. We'll see. Again, this could always turn into a long continuation trigger on a weekly time frame by making a higher low down here, by not breaking these lows, right? And then we could push. But just the way everything else is kind of setting up, I think we're going to end up having this as a lower high. XLY, this one, still kind of think there's some levels to play against on the long side. Again, I don't think that I would do anything more than day trade this sector. So, any kind of flush down into 149-ish, I'd be looking for bounce plays. But any kind of pops back into the 164 area, I'm looking to fade it. Communication sector still super weak. Remember, I think we've talked about it enough, guys. This is the weakest sector in my opinion during this whole bear market. I mean, granted, you could probably make an argument for biotechs, but biotechs also were probably the biggest beneficiary due to the COVID situation, right? So a lot of what you saw on the unwind on biotechs was because it got well overdone on the upside during 2020, right? So let's look at biotechs. Like this whole up move since the COVID lows it went parabolic, right? So it lends itself really well to a really big unwind, which is what we've seen. So I get it. You can make the argument that biotechs were the worst hit during this market correction, but it doesn't take into account that it got overdone on the upside due to COVID. So that's why you'll hear me talk about communication sector like it's the redheaded stepchild, right? This thing has just been disgustingly weak. And again, for this sector, I'm looking for shorts only. I'm not really looking to get long names in this sector. Biotech, I still think, is holding up very well, right? There's only a few sectors out there I think that looks semi-healthy, and one of them is biotechs. We're still holding this level of support. I still think we can push and break back above this 95 level, and if we do that, it's going to look like a beautiful setup right here. That would definitively, I think, get us outside of this downtrend that we've been in. And so, I guess, I'm trying to figure out a better way to do this than just using this brush tool, but this pullback, make a higher low here, and then break above this level right here, okay, to send us. That's no better way to draw it quickly on these charts than just using this stupid brush tool, so forgive me, guys, but hopefully you guys get that idea there. Let me get rid of those now. Tech got smoked last week. This is the one where I like this sector, and we talk about this all the time. Range and liquidity like crazy, so many different names to choose from. So anything in this sector is super day tradable, right? On big flushes, you're gonna get good bounces. On big pops back into resistance, you're gonna have good short setups. So up here in this is the level I'm looking at for pops back into is 143 for fades, and anything down in this 126 area for possible bounce plays on tech. And XLE and XOP are the other two sectors where I still see strength. I still see productive price action. Still see this trend being held, right? So now we've pulled back. We talked about this last week, right? I had a lot of short names that were from the oil energy sector, and I didn't want to catch a lot of flack about it because I don't want people going, why is Ricky recommending to short something in the only sector that's been strong? And it was because I thought that we were going to get a pullback to support, and that's where you want to buy. You don't want to chase things in a bear market, even if it's a strong sector. I'm not trying to chase oil and energy names. But now that we've pulled back to support, you're going to see some oil and energy names on my long list this week, okay, when we get into the actual ideas. Same with, here's the oil, right? Back into the 20-day, pushing up. And if you think about in terms of what happened on Friday and the daily candles that XLE and XOP made, XLE didn't even come back into Thursday's range really, right? It barely briefly broke previous day's highs, which are this green line here, right? So we briefly broke Thursday's highs and then just we're right back bouncing off it. Briefly broke Friday's highs, bounced right back off it. So like it's just night and day difference in the relative strength versus some of these other sectors, right? So let's get into the actual names. We're going to start with the long setups. Obviously, always start with strong stocks looking for continuation. The first name on my list is BTU. Like I said, we're going to have some oil and energy names. Now, BTU is one of those names where when this thing broke these lows here on Friday, or Thursday's lows and whatever, is this Monday? Tuesday? No. Tuesday's lows and Thursday's lows on Friday. Snap down below it, reclaim real quick, and you get this really bullish reversal looking candle. Man, I definitely want to be watching when you see that kind of price action where it should have broke down, it should have rolled over, and then it snaps back up, and you get a closing candle like that. This is on my watch for sure. 2340 is the level I want to scoop it at. You guys can see basically Thursday's lows kind of playing off against that, and that's where, if you guys want to understand this whole thing, here's your failed breakdown, here's your push up, and the ensuing long trigger was right there, right? To make this a failed breakdown right here. So any kind of flush back down into these levels, as long as we don't gap down, right? Hopefully we kind of like open either somewhere flat or maybe slightly gapping up. And I just want to see a flush right back down into where that long trigger was from Friday and be a buyer down there. And I think you can have some tight risk. You don't have to catch it. Like, there's different ways to enter these long trades. Make sure you guys have your own plan and know how to execute it, because some people are fine just catching that knife as it falls because they know how to size their position, they know where they're risking against, and they know that they're going to stop out when they're wrong. Other people do a lot better when they just wait to see some form of some sort of head nod from the author first, right? Maybe you want to see the selling exhaust first and see higher lows and something to risk against. It's all personal preference, but make sure you have your own plan, guys. All right, so that's the BTU idea, 2340 I'm looking to scoop. The next idea is PBF, another oil and energy name. Again, I just think that's a really nice close after a big pullback right down to the 50-day. So what I'm looking for on PBF is a 3160 flush to scoop, which is right down off this annual pivot. I know it's slightly below it, but it's basically playing against, you see these lows, and these lows. So just right in here. Just looking for a flush right down, and you know what? I'm going to go ahead and mark the level too. Actually, you know what? I will put the alerts in after I get done the live stream so I don't waste your guys' time. But yeah, make sure you guys understand. I just set alerts on all these. When the alerts trigger, I pull up my chart and I have my plan all ready. All right. So that's the PBF idea, 3160. I'm looking to scoop. CF. Energy, oil related, right? These guys, I believe, make petrochemicals, which are oil related. Again, nice big pullback into the 20-day, showing support and getting a big bounce. I'm looking for, what did I write down, 102 or 100. So both levels I'll be interested in. 102 is, you had this was the low, fail breakdown. Here's your higher low. And we can draw this level right here. Straight across. So 102.50ish, somewhere in that area. I'm looking for a flush down into that level. Granted, we don't gap down, right? Remember, guys, I want a big emotional move down into these levels. If we gap down to 104, 103, I'm not looking at 102 anymore, but I will be interested in 100. If we open at 104, 103, I'm looking at 100. Basically, the round psychological level right against Thursday's low a day. I'm looking for anything down in there. So 2 different levels I'm interested in, 2 different ways I'll play them. You have to understand, it depends where we open on Tuesday. All right, guys. All right, so that's CF, 102 or 100. The next idea is FUTU. And so there's it's kind of a theme going this week. It's really like my long ideas are really based on these China names and these oil and energy plays. Now, granted, there was some news the other day about the Biden administration looking at restricting U.S. investment in China tech, I believe it was saying. So, and the other thing about the China names is they'll have their markets open tomorrow, and so things are going to move on these dual listed names, and so we have to see what happens tomorrow in China on their market to see if these ideas are even still going to play. But obviously I don't have a crystal ball. I like the look of this FUTU chart. I like this little higher low setup. I think we clear 50.5, like 50.3. I'm looking to join trend and buy dips because I think this could make a push back up into 56. If things get just demolished on the Chinese market, and then we open gap down, a lot of these ideas are just probably scrapped, right? And that's fine. But if it doesn't, if things are looking good and behaving well, I want to be stalking this chart, right? So basically, I'm looking for a break over Friday's highs, and then I want to buy dips and join trend for a bigger move up. The next idea is the last idea in this section, and that's PDD. And again, I just like this high little flag. You gotta admit, like, you guys remember what the price action was like on Friday, right? PDD sure as heck didn't freaking pay attention to it. Like, sold off in the morning, but then just ripping, right? So, relative strength in the name. You have this really nice little high tight flag that just broke the highs on Friday. So on PDD, I'm looking for a flush to 71.80 to see if it can hold, which is just see these lows that it was building down here, and it kind of lines up nicely with the highs from previously, right? So any kind of flush down into 71.80, I want to see if it holds. If we gap anywhere near it and flush under it, not even interested in that level at all. Next area I'd look at is probably down here in this 69 area. But let's say we kind of open up 73, 73.50, any kind of flush down into 72 or 71.80. I'm going to be watching for a scoop. All right, so the next section is still longs, but it's oversold reversion setups, right? Names that have sold off where I think that they should be due for at least a short-term bounce. The first name is DELL, which was on our short list last week. Just figured with those ugly earnings it would get some continuation to the downside. It did. Now I think it's getting a bit overdone. Yes, we made a higher, we weren't able to break Friday's lows or Thursday's lows on Friday, but I'd rather see us down into 36, right? It's just a historical line that I drew straight across, but 36, and I think we're kind of getting a bit extended to the downside. You see how far we are off the 20-day now? This is the kind of setup, guys. Just like when I looked at short parabolic overbought reversion setups, I'm not looking to guess the bottom. I'm literally waiting for the author to tell me it's time to go. So if you guys don't understand that setup, join True Trader. I talk about it all the time. I probably talk about it too much to the point where people get annoyed, but it's a money setup. You just gotta understand how stocks trend, right? As long as this is making lower highs and lower lows, there's no reason to buy it and just keep adding to your loser, right? Why not just wait? Why not wait till something turns and you have something to risk against? Much easier that way, guys, and much less headaches. So DELL, I'm looking 36 has my attention. Zim, I'm looking again, not trying to pick a bottom, and so I'm just kind of waiting. The lower the better. I have no idea how low this wants to come. It definitely has these recent levels from back here, right, that it's playing off of. So this might be where it turns. I don't know. I don't have a crystal ball, but I know how to spot an uptrend on an intraday time frame, and I know how to have defined risk. So when Zim's ready to turn, I'm willing to be ready to get long this name just because the extension away from the 20-day downwards, right? And the last name on this list is NVDA. And basically, I don't know if it's going to play a turn from here, but this is definitely a level for it to possibly try. If it wants to, I can get long with risk under Thursday's lows and see if we can catch a reversion from here. If not, if we're trading under Thursday's lows, I'm not interested in this till the 116 area, okay? So basically, All these names in this section always follow the same pattern, guys. I'm not trying to pick a bottom. I'm waiting for the author to tell me that, not that I'm going to be right. And don't get this wrong, guys. Even when the author gives you the nod, you still can be wrong. But at least your risk was defined. At least you're not guessing. You're literally making an if-then statement. If the author tells me this, then I'm willing to put this amount of money at risk with my stop here, and it's defined risk. Can't hammer that concept home enough. All right, so now we're going to look at short setups, weak stocks looking for continuation, CRM. And if you'll remember, this was on my long ideas back when we had broken above this level, right? And why was it? Well, because it had this higher time frame major setup. And this may sound familiar because we were just talking about this at the beginning of the show, right? If I can find the right tools here, circle. Okay, so on a monthly time frame, which is a really high time frame, okay? We had a reversal setup where we broke these highs. We broke June's highs in August, which should have been the trigger to take us up to the monthly 20. You guys should have heard me say this plenty of times, and if not, write this down, say it enough times until it starts to click in your head. Failed long triggers create very powerful short setups, and failed short triggers create very powerful long setups. So this was a trigger to get long. It failed. It did not get to the target. It was a failed breakout that immediately sold straight back off down to, oh, got all these circles from the monthly chart now. Sorry guys, let me get rid of these real fast. Like as soon as we broke above those highs, it slammed back down, stuffed them, and then started rolling over. And now we're below the lows where that setup occurred. Any kind of pop, I want to be shorting on this name. And I'm not going to throw out risk management, right? Like obviously the first level I'm looking is versus Friday's high day, right? Any kind of spike up into Friday's high day. And if we just continue this line straight out, you'll see like that line was drawn long before last week's price action. I think I had this horizontal line drawn from last Sunday prep when we talked about this. And it slams up into where those previous support levels were, and it's acting as resistance. So any kind of spike up into Friday's high day, I want to get short on CRM. If this can get above Friday's highs and get going, I don't mind taking the loss and revisiting, because I think any kind of pop into the underside of the 20-day, 50-day area is like a gift, a huge gift. After you see this failed breakout up here and it bags everyone and then sells back off on the earnings, I want to be getting short CRM. And again, this really illustrates a strong trait a lot of traders have, and that is the ability to have an idea and an opinion about a setup and then change your mind when you're proven wrong, right? There's nothing worse in markets than seeing your idea be wrong and not doing anything about it, right? We talk about this. Nothing wrong with being wrong other than staying wrong. So I'm okay with being wrong, but I'm also going to adjust plans and try to capitalize on the move that is playing out. Seeing what is happening, not what you want to happen, okay? So CRM, Friday's high day, over under for a short. If it can get above that, the 20-day, 50-day in the next coming week, 2 weeks, however long it takes to try to work its way up there, that's where I'll look to fade it. BA, Boeing. I think this chart looks pretty broke. I'm looking for any kind of pop into, let's see, what did I write down on Boeing? I think it was, I know I want the 20-day, but I don't think it's going to get there. And I'll show you what the setup that I like was this push up, pull back here, lower high, so it's kind of right here. So whatever this is, 162, what did I write down? I wrote 162. See, I could just freestyle these ideas to you guys as well. Any kind of pop up into 162, I'm looking to fade Boeing. And again, the same concept like on the long stocks, where there's strong stocks looking for continuation, where we want that capitulation, like that emotional flush into our level. I still want the same thing on the opposite side on the shorts. I want a big parabolic spike into these levels. That's what gives me the highest conviction and the most edge, is the fact that the move into that level was unsustainable. So the next idea in this section, DoorDash. And I wrote a whole little spiel about this. Listen, this is one of those companies where when you zoom out and look at the historical chart, it's really deceiving, because you look and you go, man, this thing traded what, like almost up to 260, right? And we think like, God, it's trading at 58 bucks. This thing must be like really oversold. If you get rid of all that history back there from when we were in, the COVID bounce, and you start to understand some of the fundamentals behind DoorDash and like I don't even want to get into the fundamentals on them, but I will say this. I don't think it's that unplausible. I don't even know if that's the freaking right word, right? For us to look back at this 2, 3, 4 months from now, and this got cut in half again, right? I can see this being a $20 stock, and maybe even still at that price being overvalued. And really, it looks like it wants to go there. Like, you see this big move up into the weekly 20. Look at what it did. Weekly 20, new lows. Weekly 20, we haven't made new lows yet, but boy, oh boy, are we just barely hanging on, right? So if we lose these lows, the all-time lows, I want to be shorting pops on this name. I think that this thing could just be a garbage dumpster fire that's just waiting to explode. And so I'm looking for places where I can take my shots safely, right? So like this price action right here, this kind of just like, this is nothing. I don't like this price action at all. It reminds me of ASON. Like, look at this. Oh, I don't want all that on the screen, but let me get rid of some of this stuff. This price action here, does that not look exactly like what DoorDash just looked like, right? And ASON's another one that could, this one already kind of did that, right? We were trading at 50. It was up here at 140. And at 50, people were like, wow, it's really oversold, right? It got cut in half again. So like, dude, this thing could be a $9 stock, right? A month or two from now. I want to make sure on names like these that I'm paying attention, because I think any kind of pops back into, what did I write down on where I'd like it to get? 63.50. Yeah, or even 65.60, right? So those two areas, 65.60 and 63.50. And if it can get through those areas, I'll visit it up at the 20-day 67 area. But like, I just feel like this thing is a car wreck. And again, like, just like I was wrong about CRM on the long side a few weeks ago, I don't mind being wrong on this, but I'm definitely going to have an opinion, and until I'm proven wrong, I'll be able to trade it and make my money. So that's the idea on Dash. 63.50 and 65, what did I say, 65.70, 65.80. Those are the two levels. The next name is LI. So now I wrote down, not all the Chinese names look good, okay? So LI looks like it's broke. I'm looking for any kind of pop into 20. I want as close to 29 as possible to fade LI. Plenty of liquidity, plenty of range for a $20 stock. Love trading this name. Any kind of pop into 29, I think I'm leaning, okay? Square, pop into 75 for a fade. I don't think I think it's a gift if it gets there. It might not. It might end up being a pop into 71 for the fade. And to be honest with you guys, if you're in True Trade, you probably already know this. For the guys that are not in our room, like this level, this 75 level is like the dream level for me. But if this thing opens at 65, 66, and has a 5-point parabolic move right into 71 on Tuesday, I'm fading that too, okay? Like, I'm 100% gonna fade this on a parabolic move into 71. But the idea I'm throwing out on Sunday prep's gonna be 75, because that's the level where it's like, dude, we get up there and I'm really, really getting excited about the trade. Where it might be a bigger picture idea versus, a big pop into 71, and I'm looking for a pullback. Like, I'm just trying to take a piece of that move. That's a mean reversion trade on that. So hopefully you guys understand those differences. All right, and then the last section is overbought reversion setups, and there's only one name in this section, and that's FSLR, and it's not there yet, right? Like, I want a speed up into like 137. Did I write down? Yeah, a speed up into 137, and I'm excited. Where does that level come from? Oh, I'm probably gonna have to. Yeah. Well, I didn't really want everybody. These are notes I make on a lot of the stuff for the guys in True Trader. But like, here was your last failed breakout. This is a weekly chart, right? And basically, the level was the ensuing short trigger was underneath this 137 area. So that's what I'm looking at, is for a speed up into that level. And that's where I'm wanting to fade this thing. We're kind of close to there. If you look at the weekly chart, you can see it's just been straight up, up, up. But the problem is when you get into the daily time frame, you realize that it's just kind of trending, right? It's not so much. This isn't, maybe here I was a bit excited. And it gave the setup and it tried to reverse, but it couldn't even get back to the daily 20. And then it resumed trend. So I really, really do want to see this one speed up. But if it does, it fully has my attention up there in the 137s. So that's it. I'm going to see if we have any questions. And then I'll let you guys get back to your Labor Day weekend. All right, guys? Hold on one second. Oh, I don't know if there are any questions. I don't blame you guys if you guys are not watching this live. I know it's a holiday weekend, right? So if you guys are in chat watching this live, thanks for joining me on a holiday weekend and hearing me geek out. But if there's no questions, I'll let you guys all go back to enjoying your family and your friends. Stay safe. Make sure, remember, guys, markets are tough. Bear markets are really tough, and a lot of people feel a lot of pain when they look at their 401ks, when they look at their any kind of market account they have where they have long-term positions and stuff. And just make sure you understand that people go through things and you might not know about it, right? Even wealthy people that look like they are a happy, wealthy, successful people, like, for God's sakes, Robin Williams committed suicide. Like, that guy was a comedic genius, right? And that just goes to show you that, like, underneath the surface sometimes there's some shit going on. So just be there for your fellow traders, guys, and try to be a pillar of strength for people when you can. All right, everybody stay safe. Join True Trader. Use the coupon code YouTube for, I think, 20% off. I hope to see you guys over there. There is a 5-day trial for, I think, $30, which is literally next to nothing for what you get. So please, guys, give us a shot. Come check us out, and I'll see you guys Tuesday. Peace.